Welcome to a new journey, a journey towards understanding the world of finance and investment. This vast realm of knowledge is not just for Wall Street wizards or Silicon Valley tycoons, but for you and me, everyday people navigating everyday life. Why is financial education crucial, you may ask? It's the key to making informed decisions, whether you're choosing a mortgage, planning for retirement, or even just deciding where to dine out. It's the tool that empowers us to plan for the future, to dream big and realize those dreams without the fear of financial instability. It's the secret to achieving financial freedom, to unshackling the chains of debt, and living life on your own terms. Imagine a life where money serves you, not the other way around. Knowledge is power, and in the world of finance, it's the power to change your life. Money, we use it every day, but do we really understand it? That's the question we're addressing today. Let's take a trip down memory lane to a time before the convenience of credit cards and digital payments. Imagine you are a potter, and you need bread for your family. In the days of the barter system, you'd have to find a baker who needs pots. This exchange of goods and services is the most basic form of trade. But what if the baker doesn't need pots? Here's where money comes in. Money, in its essence, is a medium of exchange. It allows us to trade one good or service for another, without the restrictions of the barter system. It's a universally accepted symbol of value that creates a level of convenience in our daily transactions. But money isn't just about convenience. It's also about value. The value of money isn't in the paper it's printed on. It's in the trust we place in it. We trust that others will accept our money in exchange for goods and services. We trust that the government backing the currency will maintain its value. This trust is what gives money its value. Now let's bring this understanding home. Every time you're paid for your work, you're exchanging your time and skills for money. That money then becomes a symbol of your effort, time, and talent. It's not just paper, it's a representation of what you bring to the table. So the next time you look at a dollar bill, remember it's more than just a piece of paper. It's a tool that enables trade, a symbol of trust, and a representation of value. Understanding this is crucial in making informed financial decisions, whether it's deciding where to spend, how much to save, or when to invest. Remember, understanding money is the first step to mastering it. So, let's continue this journey of financial education together, empowering you to take control of your financial future. We all save money, but is that enough for a secure future? This question introduces us to the fascinating world of saving versus investing. Let's take a closer look. Imagine you're a squirrel, diligently gathering acorns and stashing them away for the winter. That's saving. It's cautious, it's safe, and it ensures you have a stockpile for when times get tough. But what if, instead of just hiding those acorns, you planted them? Over time, they'd grow into trees, producing a constant supply of new acorns. That's investing. Now let's translate this to our human world. When you save money, you're setting it aside for future use, much like our squirrel friend and his acorns. Saving is crucial for short-term goals and emergencies. It's like a safety net, catching you when you fall. Investing, on the other hand, is more like planting those acorns. When you invest, you're putting your money into things that have the potential to grow or generate income. Stocks, bonds, real estate, these are all examples of investments. The goal is to make your money work for you, instead of just sitting idle in the bank. But why invest when you can save? Well, think about inflation. It's like a pesky squirrel stealing a few of your acorns every year. Over time, the purchasing power of your saved money decreases. Investing, however, can help you outpace inflation. Now, investing isn't without risks. Unlike saving, where your money is relatively secure, you can lose your initial investment. But remember, with higher risk comes higher potential returns. It's also important to remember that investing isn't a get-rich-quick scheme. It's a long-term commitment. Think of it like growing a forest from your acorns. It takes time, patience, and a bit of resilience when storms hit. To sum it up, saving is like providing for today, while investing is about planning for tomorrow. It's not about choosing one over the other, but rather understanding when and how to use each to your advantage. Investing is not just about making more money, it's about making your money work for you. Now that you know the importance of investing, let's delve into the basics. Investing is a lot like planting a seed and watching it grow. You're putting your money to work, hoping it will sprout into something more. But before you start, let's understand some basic terms. First up, stocks. Imagine owning a slice of a big apple pie. That's what stocks are like. When you own a stock, you own a piece of a company. As the company grows and profits, so does your slice of the pie. Then we have bonds. Let's think of bonds like a loan you give to a friend. In this case, the friend is a company or a government. They promise to pay you back with interest after a certain period. Now let's talk dividends. Picture this. You own a piece of a fruit tree, the company. When the tree yields fruit, the company shares a portion of these fruits with you. That's what dividends are, a share of the company's profits given to its stockholders. Mutual funds? Think of it as a basket filled with a mix of stocks, bonds, and other investments. It's like a potluck dinner where everyone brings a dish. You get to taste a variety of dishes without having to cook them all yourself. And finally, we have index funds. Imagine you're at a buffet. Instead of choosing individual dishes, you take a little bit of everything. That's what index funds do. They represent a broad market, like the entire US stock market, giving you a taste of all companies. Remember, there's no one-size-fits-all strategy in investing. It's like shopping for groceries. You pick the items you need based on your dietary requirements, budget, and taste. Similarly, your investment choices should be based on your financial goals, risk tolerance, and the time you have until you need the money. Investing may seem complex, but once you understand the basics, it's as simple as shopping for groceries. Investing is a game of risks and rewards, but with knowledge you can play it smart. Imagine walking a tightrope. In investing, this tightrope is the balance between risk and reward. The concept of risk in investing is much like that. It's the possibility that you may lose some or all of your original investment. It's the uncertainty that keeps the game exciting, yet nerve-wracking. Now let's think about a real-life example. Consider a startup company. Investing in a startup can be high risk. They're new, unproven, and their success isn't guaranteed. But if that startup takes off, the potential reward could be astronomical. Think about those who took the leap and invested in companies like Apple or Amazon when they were just starting up. They faced a high risk, but the reward, well, we all know that story. On the other end of the spectrum, there are government bonds. They're considered low risk. The government, after all, isn't likely to default, but the trade-off? The potential rewards are lower. It's a safer bet, but the payoff may not be as exhilarating. So how do we manage these risks? Knowledge, my friends, is our most valuable tool. Understand the market, the trends, the companies or commodities you're investing in. Research, analyze, and then make an informed decision. Diversify your portfolio to spread the risk. Don't put all your eggs in one basket. Risk tolerance is a personal matter. What might seem like an exciting opportunity to one person could cause another sleepless nights. It's essential to understand your own comfort level with risk, and to invest accordingly. And remember, time can also be a risk factor. Short-term investments can be more volatile, more risky, but long-term investments, while they may have ups and downs, tend to smooth out over time. Investing is a journey, not a destination. There will always be risks, but with knowledge and a well-thought-out strategy, the potential rewards can be significant. Remember, in the world of investing, no risk means no reward. We've taken our first steps into the world of finance and investing today. We've delved into why financial education is vital, understood that money is more than just paper, and explored the difference between saving and investing. We've also covered the basics of investing and talked about the risks and rewards that come with it. This is just the beginning of a fascinating journey. There's a vast world of finance and investing waiting for you to explore. The more you learn, the better you become at making informed decisions that can shape your financial future. Don't let the momentum stop here. Keep on learning, keep on exploring, and keep on asking questions. The path to financial freedom might seem daunting, but remember, every great journey starts with a single step. Don't forget to write down and memorize these major takeaways every morning. If you found this video helpful, please subscribe, comment, like, and hit the notification bell for more insights on money and wealth. Remember, the journey to financial freedom starts with knowledge,